We are in what many consider to be one of the most volatile times for the market. It's late summer, we've got low volume, and of course, the looming presidential election. Add in the uncertainty over the coronavirus, and you can see why investors may not know which way to turn. Shawn Gibson is the Chief Investment Officer at Liquid Strategies and Overlay Shares, and he joins us now. Shawn, good to see you. You are the volatility guy. Are we on the verge of a major period of volatility for the stock market?
Yeah, I think more volatility is coming than what we've been used to the last couple of months. We've definitely had a nice little break with this kind of slow grind higher over the last couple of months, but definitely looking forward at the election. It's all about the election. And if you look at VIX futures, it's already pricing in a VIX closer to 30, both in October and November. So pricing in both more volatility leading into the elections and also more volatility after the elections.
Shawn, I'm certainly on the prowl for crazy trades, crazy market moves into the election. What sectors, where might we see that spike in volatility?
You're going to see it primarily in the S&P. I mean, so you're going to see at some point big buyers of below market puts, people looking to protect their downside, big buyers of upside calls for some sort of snap up rally. So that's what you're going to see. But timing's everything when you're buying calls, buying puts. If you buy them too early, the decay can be quite painful. So most traders out there are trying to wait for kind of that perfect moment to do it. Not too early, not too late. So a little bit of the Goldilocks scenario.
Shawn, could you give us share a couple potential trades? How would an investor prepare now for that eventual spike?
Yeah, I mean, for us, we tend to be more volatility sellers. So what we'd like to be able to do is wait for that opportunity to be really robust and be able to step in and take advantage of the volatility when it eventually comes. But there's certainly an argument to be made for some investors who want to potentially have it both ways, where they could buy volatility now, whether that's in terms of for more sophisticated investors buying VIX futures or buying S&P 500 options now, and then at some point getting on the other side of the trade, selling VIX futures or selling S&P options in anticipation of volatility coming back down, which I do think it will by the end of the year.
So, Shawn, you just ticked off some ways investors are betting on volatility. They're using the stock options trade. Some are using the complicated tool of derivatives tied to the VIX, the so-called volatility index. But how are you hedging against possible post-election chaos?
Yeah, so once again, we tend to be more option sellers, but we're always fully hedged. So this isn't unique to certain type of environments. And I think it's important for option sellers out there who are trying to capture this volatility risk premium that's been prevalent in the market for over 20 years. We think it's very important to always have risk management first. So we always believe in hedges. So for example, we're selling below market put options in the S&P 500, but we're then protected further below by owning put options on the S&P 500, just in case volatility goes in an unexpected direction.
You know, Shawn, markets tend to be volatile ahead of elections anyway. October and November tend to be the wildest months of the year for the market. But are there indications that this year might be different and more volatile than usual for an election year?
Yeah, I think more volatile. So once again, VIX futures are pricing in more upper 20s leading into the election. That's higher than I'm used to seeing. So kind of about this time on a typical, mid-August afternoon or mid-August morning, you're typically looking closer to low to mid 20s VIX future pricing, looking at September and October. So it's significantly higher than it traditionally is in a non-election cycle. And I do think, for reasons we all understand, this election cycle has more opportunity for volatility than previous ones.
How long do you think we're going to see that volatility last? I mean, are you betting on this going out to January if there is some of that post-election uncertainty out there? When do things start to go back to something like normal?
Well, the way things typically work, if you think about earnings reports, are kind of the same way. if you have some stock that's reporting tonight, you tend to see volatility in that stock increase and the option pricing reflecting an increase in volatility leading up to that event. Once the news comes out, you tend to see a significant compression in that volatility. And I wouldn't be surprised to see the same thing, that you see a significant ramp up in volatility leading up to the election. Once the news is out, there could still be a compression. Now, the question all comes, how far does volatility come down after the election? That's going to depend on the results and kind of how things play out in a week or two after. So I do think after the election, volatility will come down. It's just the order of magnitude.